To watch the full lecture of all subjects, kindly subscribe to my YouTube channel and press the bell icon because whenever I post the new videos, you will get the immediate notifications. Hello everyone, welcome to my YouTube channel. In this particular video, we will solve one more problem in ARR method, that is accounting rate of method. So the question is on the screen. Please take the screenshot of the question or at least pause the video and write down the question. It's better that if you try to solve along with me. Okay. Determine the accounting rate of return. So accounting rate of return is nothing but ARR, average rate of return, from the following two machines. So machine X and machine Y. Two machines they have given, machine X and machine Y. From these two machines, we need to calculate which or we need to advise the company which machine is best. So they have given the original cost of machine X is 56,125 and machine Y also 56,125. Additional investment in working capital. So they have invested the additional working capital which is 5,000 and 6,000. Estimated life in years. So estimated life of machine in years, 5 years and 5 years. Estimated salvage value. So salvage value also they have given, it is 3,000 and 3,000. Income tax rate. So income tax rate they have given, how much it is? 55%. Income tax rate is 55%. Next, they have given annual estimated income after depreciation after tax. So CFADAT they have given, cash flow after depreciation after tax. So even for calculating ARR, we require CFADAT only. ARR na calculate ಮಾಡಬೇಕಾದ್ರೆ ಈ CFADAT ಪ್ರಾಫಿಟ್ ನಮಗೂ ಬೇಕಾಗಿದ್ದು ಕ್ವಶನ್ ಅಲ್ಲಿ ಅದನ್ನೇ ಅವರು ಕೂಡ ಕೊಟ್ಟಿದ್ದಾರೆ. So for total 5 years they have given what is the cash inflow. Depreciation charged on straight line basis. So here we need not calculate any depreciation, we need not calculate any tax because directly they have only given the profit that is required for us to calculate. This is simply to confuse you people. They have given income tax rate and depreciation. Okay, so don't worry about that, just ignore that because question they have only given CFADAT. Now let us try to solve the problem. So step number 1, first step will be calculation of ARR for machine X. First we will calculate for machine X. So what is the formula to calculate ARR? ARR is equal to average annual CFADAT divided by average investment. Now first let us calculate annual average or average annual CFADAT. First let us try to calculate this. So the formula to calculate annual average CFADAT is equal to total of CFADAT divided by life. Okay, life of the asset or number of years. Now total CFADAT, if you observe here, add all these things. 3,375 plus 5,375 plus 7,375 plus 9,375 plus 11,375 plus 36,875. When you add all these three things, we will get a total of how much we'll get. So total they have only given directly, sorry, see in the question only they have given total directly 36,875. so let us not calculate, there is no need to calculate, directly we can take. So total CFADAT is how much? 36,875 divided by life of the asset. How much is the life of the asset of machine X? It is 5 years. So divided by 5. So 36,875 divided by 5 will be 7,375. This is average annual CFADAT. Now we have to calculate average investment. Okay, the formula to calculate average investment is equal to original investment minus scrap value divided by 2 plus working capital plus scrap value. Original investment minus scrap value divided by 2 plus working capital plus scrap value. In question they have given the original investment or original cost. Machine X original cost is 56,125. So 56,125 minus scrap value. Scrap value also they have only given directly. It is 3,000 rupees. 3,000 divided by 2 plus working capital. Working capital is 5,000. 5,000 plus salvage value, here we have written 3,000. Now let us try to solve this. So 56,125, it will be 53,125. Okay, divided by 2 plus 5,000 plus 3,000 will be 8,000. Now 53,125 divided by 2 will be 26,563. Okay, plus 8,000. Plus 8,000 when you do, the answer will be 34,563. This is average investment. This is the answer for average investment. Now ARR. Let us try to calculate ARR. ARR is equal to, what is the formula? Average annual CFADAT into 100. Sorry. Average annual CFADAT. What is the average annual CFADAT? It is 7,375. So I will write that here. 7,375 divided by average investment. Average investment we have found out. What is the average investment? 34,563 into 100. If you solve this equation, we will get average annual rate of return. So 7,375 divided by 34,563 into 100. If you do, you will get the answer is 21.34%. So ARR is equal to 21.34%. This is now for machine X. Now let us try to find out for machine Y. Now of accounting rate of return, or it is also called as ARR. So now we are calculating this particular thing. So now we are calculating especially for machine Y. In previous problem we calculated for machine X. Now we will be calculating for machine Y. So the formula is ARR is equal to average annual CFADAT divided by average investment into 100. If you do this, you will get ARR. But first let us find out average annual CFADAT. To find this average annual CFADAT, the formula is total of CFADAT divided by number of years or life, number of years. So now total CFADAT they have directly given in the question. So see here, for machine Y it is 36,875. 36,875 divided by number of years. So the life of estimated life in years for machine Y is 5 years. So we will write that 5 years. So 36,875 divided by 5, it will be 7,375. So this is average annual CFADAT, average annual CFADAT. Now the second step, we need to find out average investment. Average investment. The formula is original investment minus scrap value divided by 2 plus working capital plus salvage value or scrap value. So this is the formula. Now let us try to evaluate it. So original investment of machine Y is 56,125 minus scrap value is 3,000 divided by 2 plus working capital. Working capital they have given in the question, addition investment in working capital is 6,000 plus scrap value here we have found out, that is 3,000. Now when we evaluate, it will be 53,125 by 2 plus 9,000. So 53,125 divided by 2 will be 26,563 plus 9,000. It will be 63. Now with this information we need to calculate ARR. So what is the formula to calculate ARR? Average annual CFADAT divided by average investment into 100. So average annual CFADAT is 7,375 divided by, this is the average investment. So divided by average investment. How much is the average investment? Average investment is 35,563 into 100. If we evaluate this, we will get ARR. So 7,375 divided by 35,563 into 100, it will be 20.73%. 73%. ARR is 20.73% for machine Y. This is how we need to solve the problem. Hope you have understood how to solve the problem. Try solving the problem once by yourself. While solving, if you get any doubt, please put all your doubts and queries in the comment box so that I can respond to your doubts and queries as soon as possible. Thank you for watching the video. I'll come back with the next video. If you have any queries regarding today's session, kindly send your queries to education.mbroadcast@gmail.com.